Good morning, everyone, and welcome to the Money Control live stream. You're watching Markets with Santo and CJ. Well, the inflation data for the month of August came out, and clearly it showed that there has not been much relief if you're a consumer out there.
If not a consumer, what else, CJ?
I mean, look at it, Santo. If you look at the 3-month downtrend, that we were seeing for inflation, we were seeing that it was weakening on a month-on-month basis for the past 3 months. That streak has now been snapped. Inflation. And this has happened despite the fact that imported inflation, which has taken the major share of the blame back here, that has actually hit a 23-month low, which is very surprising. That means it's domestic demand now and domestic food prices.
Mainly food prices. That's the big driver.
Yeah,
CJ.
Major driver. And if you look at the retail inflation data, it came out around 7% for the month of August. Slightly above street's expectation of about 6.9% for the month of August. Overall, I think, Santo, while the inflation trajectory still remains quite high and remains quite uncomfortable from a central banking point of view, I think investors more or less have factored this in. They know that at this point of time, for the entire year, we know that inflation is going to remain above the comfort zone of the RBI, which is about that 2 to 6% band. And I think going ahead, we also know that RBI is expected to raise rates in that 25 to 35 basis point trajectory in the upcoming meeting, and probably another 25 basis point in the December meeting.
Well, yes, and at this point, RBI seems to have little choice but to raise rates given the way inflation is headed.
And also what Fed is doing.
Yeah, it's for the 8th month that now inflation has been outside the RBI's comfort zone. Now, it's interesting how this will play out. CJ, central banks all over the globe have been saying that they want to move towards a neutral rate, which is a real rate, which is basically your inflation, your interest rates, nominal interest rates minus inflation. Now, in case of India also, if you see the projection that most analysts have given, that's about, I think, 5.75% or closer to 6%. But the RBI's own target for this year, for this fiscal, is about 6.7%. So, rates, even after RBI continues to hike rate, it will most likely still be negative real rates for savers like you and me. And now the other interesting point is that whenever interest rates rise, at some point some money starts then moving out of risk assets to fixed deposits. We have seen that in the past. This time the trend has not been so strong because despite the recent increase in interest rates, absolute interest rates have been fairly low compared to the kind of returns that you've been getting from the stock market, even if they are volatile. But CJ, I think this is where, if rates continue to rise further, which most likely they will, given that despite other factors like some of commodity prices coming off, you still have food, fuel prices remaining fairly high, which means that headline inflation level will be high. So, given this scenario, I think we should be a little cautious on the market. CJ, what do you say to that?
I think you made a very interesting point about real interest rates. And in markets, there is a saying that whenever real interest rates are negative, that generally is very, very positive for equities in general. Because if you're putting your money in a savings deposit, you're putting your money in fixed deposit, you're bound to lose money if you look at it after inflation. And therefore, you will take that money out and put it in an asset that is going to make you returns after inflation, right? And generally, we know that equities tend to do that quite well compared to any other asset class. And I think that is where the crucial point lies for the Indian equity market. While RBI has stated that they want to move to a positive real interest rate regime, because they also don't want to be hurting people who are the savers out there, probably senior citizens, retirees, and all those. But at this point of time, clearly, I think that gala period for equities will continue because RBI still has to raise rates, interest rates way too much going ahead to probably bring inflation below the ongoing repo rate. So for me, I think markets in general will not bother themselves too much or lose sleep over this inflation data, and that you can see in the trade setup as well for this morning. If you look at the Nifty, the SGX Nifty is indicating a very, very strong start at this point of time, almost a 100-point gap up move, and we are very, very likely to open, almost certain to open above that 18,000 mark, Santo, for the first time in a very, very long time that we'll be above the 18,000 mark. And overall, I think if you look at it, Santo, I think going ahead, the main criteria for investors would be that demand remains the main picture, right? And I recently wrote a story about how FIs are positioning themselves in this market. And it was very interesting to see that August, which was probably the record inflows that we have seen in August, about $6.1 billion, almost 40% of that money went into consumer-facing names, your automobiles, your consumer durables, your FMCGs of the world, and consumer services, which is travel sector. So clearly, FPIs also believe that domestic economy and domestic consumers are really going to drive this economy going forward, at least in the short term, while the capex cycle chugs along, slowly and steadily.
Well, that said, let's move into the quick market setup. I think, CJ, the point here is that we are still seeing signs of exuberance now beginning to build up slowly. Market is still.
Come on, we have not even hit record highs, Santo, and you're feeling exuberance already.
No, market is ignoring rising yields on US Treasury, and if you see the recent JP Morgan report, it still does not mention India among its favored emerging markets. All set.
Is that because of valuations?
Well, could be one of the reasons, but the fact that India, despite the strong rally, does not find a mention, interestingly, is I think something to ponder about. Well, that said, the stocks on a watch list this morning. Aditya Birla Capital, a spectacular run there over the last couple of months. The stock has rallied close to about 30% now. Now, some of the factors which are now beginning to work out well for Aditya Birla Capital is that the worst of the asset quality seems to be behind, at least that's what the market seems to be believing, and you saw traction across all its businesses. In the lending book, disbursements were up close to about 170%. That's quite a big jump. And in the lending book, the portion of retail, SME and HNI, that's gone up to close to about 64%. So that's something the market is taking heart from. Then you have the insurance business, which is again doing well. The AMC business at this point in time is something the market does not seem to be too happy about. But there also there is some improvement at the margins, because the share of equity in the overall assets, that has improved from about 37% to 42%. So things slowly appear to be falling in place there also. The only slightly worrying thing is that at this point in time, given the run up and the huge build up in open interest, which is now at the highest point for this year, there is some concern that maybe the stock could be in an overbought zone.
Clearly, Santo, I think that will be, of course, my concern as well. It seems like a lot of the momentum indicators also on the stock are at this point of time blinking a possible pullback in the near term. And you would not be surprised, given the sort of jump that we have seen in the stock recently. You will not be surprised that investors take a pause, probably reassess the situation, reassess their own thesis on this company, and then probably take the next step going ahead. So I would not be surprised if you see some bit of profit booking on this counter. But overall, I think NBFCs overall in general are also now started to look up, which is in a way a bit counterintuitive, given that during an environment of higher interest rates, generally their cost of borrowings tend to rise. But I think what investors are looking at is that the interest side, the interest side of the P&L, or what you call loan growth, I think that is going to be very strong, especially with the domestic economy now, seeing a good amount of credit offtake with the festive period coming up. I think a lot of NBFCs are now getting very, very, attractive bids from investors out there, because they feel that loan growth has really come back to the economy. And I think apart from that, but in the short term, it is possible that we could see a pullback on this stock. Well, the next stock on my radar today would be Titan from the consumer space. And it's clearly, I mean, it's a very obvious choice if you are somebody who is, bullish on the Indian consumption theme at this point of time. It is probably going to be among the top bets as far as the festival period is concerned for investors. We had touched upon the stock last week as well on our, special show about festival bets, Santo. And I think if you look at Titan, this performance so far this year has been very spectacular. And you can see that in the stock's performance as well in general. But I think there is still a lot of skepticism when it comes to Titan. And it's a little confounding to understand why that is. Maybe it is the premium valuations. Maybe it is that maybe investors now have, wider choices in terms of jewelry makers out there. But clearly, Titan's fundamental game is quite strong at this point of time. And it is going to continue to gain and expand its market share going ahead. Overall, if you look at the October to February period, generally it's a very traditionally very strong period, because you have the festive season, and once that ends, you get into the wedding season as well in the country. And clearly, I think you could expect that earnings momentum that we saw in Q1 to continue in Q3 and Q4 as well.
Well, no argument as far as the fundamental side of the story is concerned, CJ, and this is a stock, if you can stomach the volatility, then probably is the stock you should be going for.
Surprising, given a nifty stock, to be so volatile.
Almost now more than 30 odd % up from its lows in June, and it's now already made a new high, or is on the edge of making a new high here. The only thing I would argue against the stock at this point is again the technical side of it. There are indications that the stock may be overbought, and as you have seen in the past, the moment market sentiment changes, high beta stocks like Titan wasn't a high beta stock till recently, but that seems to have changed over the last 6 months. If sentiment changes, and that's when immediately the first thing market starts questioning is stocks with high valuation, and that is where probably Titan could take a beating.
I take your point, Santo, on that, but I think for a lot of investors, if you have been part of Titan's journey over the past few years, you don't even have to be part of it for 10 years. I mean, even if you have held the stock for the past 5 years, you know that these bouts of volatility have actually provided you very good entry points and very good buying opportunity. And I think a lot of investors out there, at least investors, not the short-term traders, will look at any such bout as a bargain buying opportunity.
Well, next stock is Abbott India. The stock is a strong play on the strength in the Indian pharma market, and
I know been quite bullish lately on
yes,
that.
In fact, CJ will always never fails to mention that the moment I bring a pharma stock, he will say that US price erosion is his pet thing. So this is something that you can't really pin me down on. The performance in the domestic market for Abbott India has also been pretty strong.
Well, Santo, before you continue on Abbott India, let's quickly just take a glance on how the market has opened, and it's been a very, very strong start. We are above the 18,000 mark finally, Santo.
Yes, and
we have seen this day finally.
So probably we could now see some kind of a melt up, as they call it.
Yes.
The most of the fence sitters would now become
the
converts.
bears would be probably at this point of time quivering in their dens, because 18,000 was that level that will probably trigger a lot of stop losses for those who are taking short positions, and this is clearly a sign that Santo, that market has really broken out. We talked about that 17,770 level. That was that range in which market was stuck for a very, very long time, and since that breakout, it's not taken us too long to move 300 points higher, and now it seems like 18,000, the record high around 18,400, 500 will now be the next target for the market.
Yes, a strong market breadth there. 1,800 stocks up and just 200 down at this point in time. And in the early gainers, you have Infosys, which is up close to about 1%. Hindalco is up about 1%. Nifty Bank is also showing good strength. They're up 0.4%.
And had a good strength in the broader market as well. The Nifty Mid Cap and the Small Cap Index higher by about 0.7% each. So clearly, those two indices continue their run. They are almost now higher by about 25% from their lows, or the 52-week low that they had hit back in June. But also, they're still not close enough to their record highs. I think there's still some distance to go as far as the record highs are concerned for both these indices. And it'll be very interesting to see which out of the three, the Nifty Mid Cap and the Small Cap, hit their record highs first.
Well, coming back to Abbott India, the first quarter numbers were pretty strong, and one thing which can be said in favor of Abbott India is that it has managed to maintain leadership in its key brand, that's Dufaston, Thyronorm, Dufalac and Udiliv. Besides that, the company has been launching products quite aggressively over the last couple of years, and this trend is expected to continue over the next couple of years also, where the company is planning about 100 odd launches, mainly in the gastrointestinals, women health, vaccine and consumer health. Now, there's been built up of short positions in the stock. That's why you're seeing some pressure out there. In the last month alone, last month or two, the stock has now come off by about 10% and is among the laggards in the pharma sector.
Well, Santo, I'm not surprised by the recent weakness in the stock, largely because of the fact that Abbott was probably one of those safe bets that market was going to when the going was very tough for the bulls out there. MNC pharma companies in general were doing quite well, because the view at that point of time was that these are the companies where growth is going to be very, very steady going ahead. You had a good amount of visibility and certainty as to how earnings growth are going to pan out. Now that the market is chasing growth in terms of higher growth, high beta stocks, clearly a stock like Abbott India will suffer, and I think you can see that in the price performance so far. And I would not be surprised that this bout of profit booking probably continues going ahead, probably till the earnings come out. Maybe after the earnings, you may see renewed interest in the stock if, of course, the company manages to deliver strong growth. But generally, I would expect that at this point of time, I think a steady compounder but a slow compounder like Abbott would not be at the top of a lot of people's shopping list. Well, last stock on my radar today is from the chemical space again, and this is SRF. Well, you don't really need to say much about SRF. I mean, it is probably the titan of the consumer space, the TCS of the IT space. In that sense, SRF has been a very, very strong compounder over the past 5 to 7 years now. And going ahead also, it remains the strongest bet as far as the Indian chemical and specialty chemical space is concerned. Now, SRF in general will also be a very, very big beneficiary of what is happening in Europe, Santo, at this point of time. Let's not forget that Europe is a major hub as far as a lot of chemical products are concerned. And because of the energy crisis there, a lot of factories are shutting down. We know the struggles that BASF, one of the largest chemical makers in the world, is going through at this point of time. And that is going to provide a company like SRF to gain export market share in the coming months and quarters ahead. Apart from that, of course, the management has recently come out with a 15,000 odd crore Santo capex plan, which really I feel could expand the horizon as far as the growth trajectory of the company is concerned, and you could see this stock being re-rated once more going ahead as the earnings execution also delivered.
Well, again, as far as fundamentals are concerned, it's very hard to argue against this stock, mainly because of the kind of strength that right now you're seeing in two of its major segments, which is specialty chemicals as well as fluorochemicals. Now, both the segments are seeing kind of explosive growth, which is why you're seeing the stock having made a new record high. Besides, there's also now the shift from fluoro, which is the fluorocarbons, hydrofluorocarbons to hydrofluoroolefins. And when this shift happens, SRF is among the few companies, or probably the only company at this point in time, which has the technical capability for that in India. So that again is going to be a big positive for SRF. So at this point, purely on fundamentals, well, I can say that the stock is overbought and all that, but if one were to look at fundamentals, yes, this is the stock which is set to do well.
It's like, I mean, if you look at the specialty chem space, I mean, this has been a compounder for the past 5-6 years now, Santo, and SRF clearly is a leader there. It's almost like talking about Infosys or TCS back when the IT days were quite hot. And I think in that sense, probably these sort of corrections, these sort of profit booking bouts are opportunities for investors out there.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. Till then, have a spectacular trading day.